do. And we are live. Hello, welcome to a special guest episode of Two Accountants, One Gap, or the sub little hidey hole of negative 2A1G, because I am just, a student of accounting right now. I am joined, and luckily we are all joined by a wonderful guest here, Fabio of Capital Mindset. I have his information in the description, but feel free, at the start and at the end to, promote yourself, promote what you have. Good sir.
All right. Well, today, Bacon, he grabbed me and took me over here, and he's like, "Hey, we need to look at this company that he's really long." So that's what we're gonna do. We're gonna actually go over his investment, and I'm gonna judge whether or not uh, it's good. He actually told me he's kind of concerned a little bit, but it did really well. He put 90% of his net worth into it, and I think he's already tripled his money.
This
He
is
went
not
long hauls.
this is not true. This is factually incorrect. Regardless of any positions we may or may not have, or however they're sized in this case. Company in question that we're going to use as an example for a broader concept would be B. Riley Financial Inc. Um, Ticker symbol RILY, I believe. Uh, yeah. So let's start the presentation then.
All right.
All right. So I know Andrew likes to go straight for the company's relevant IR, but sometimes not all companies have that, and I can be a little bit of a luddite or stuck in my own ways. Good old SEC Edgar. And for efficiency's sake, anyone could, go to your company's relevant 10K and, control F, auditor's opinion, or, Jesus Christ. Uh, yeah. And ultimately, for me though, I just know, where it generally is and where to look for it. But once you find the auditor's opinion, you're generally going to find hopefully some points of interest or points of concern. And what stood out to you in this case with B. Riley
So
Financial?
for as far as the auditor's opinion, it's
Yeah.
quite literally the part where they discuss that the valuations B. Riley gets to, they can't really stand by 100%. It's the auditor's way of protecting themselves in case something does end up happening. So they're saying, well, this is a level 3 asset. Level 3 asset is ambiguous. So there's level 1, level 2, and level 3.
Hmm.
And it being a level 3 asset, the auditor has a little bit of discretion in saying, well, okay, we're just going to trust. All right. But we're also going to say this, that we cannot verify 100% the validity of that valuation. A level 1 asset you cannot lie about, right? Level 1 asset, you learn in your accounting school when you're studying for the CPA, it's cash in the bank. You can't lie about that. If you don't have the cash in the bank, the auditor is not going to let that slide by. But I could say, hey, well, this is a bad example. This would be maybe more so like a level 2 asset where I have sort of corroborating evidence for the valuation that's a little bit stronger than my evaluation. So I bought this cup, and this cup has a certain value, and there's a verifiable market where I can verify the value of this cup. But a level 3 asset, there's nothing on my desk that I can really point to. But let's just say I have an operation with Bacon and it produces a certain set of cash flows. We're presume at least it's not that degenerate that it doesn't do anything. But let's say it does, and it produces a certain set of cash flows. And then I say it's valued at $100,000. And then, they're going to say, well, how did you come to that? Well, I came up to it with this valuation. I projected out into the future that the business is going to make this much, and then I discounted it back. And then you can come to me and say, well, what did you discount it at? Well, I gave it this discount because of this reason and that reason. And that's the valuation I came up with. And that's my evidence is that valuation that I'm going to show you. And then you have a choice as an auditor. You can say, no, more likely than not, you're not. But since it's a level 3 asset, there's not really a way to verify. You don't have anything telling you what the valuation is. So that's a lot of what B. Riley has. There's not really a market for it. So level 2 assets, level 1 assets, fine. Level 3 assets, you start to get into muddy waters, and the auditor's opinion regarding those valuations, it's interesting. Well, it's not interesting. It's not surprising considering what we kind of know from short sellers' complaints. I want to not take up all the time, but Bacon, what did you think about it? Oh, sorry.
Mm-hmm.
I wanted to say right in front of everyone's face, look
Yes.
at the first sentence.
What, as far as like critical audit matters?
Sorry. Description of the matter.
Oh, description of
The
matter.
very
Yeah.
first sentence is what I was talking about. All that
Yep.
ranting.
Yep.
Look
It's
at the
right
very
there.
first sentence. Yeah.
Yeah. At fair value.
Well, what did they say? Level
3 investments, which includes equity, securities, and loans receivable at fair value. Did you want me to keep going?
No. Just wanted to point out.
Yeah. Yeah. So it's funny because the fair value that the company claims and the auditors are disputing. Fair value is one of those terms that like, if you're an outsider looking in, you're like, what the hell are we talking about? The hell do we mean? Um, so that probably will be for down the road as far as things to just be aware of that we'll cover in depth, or Andrew and I will cover in depth if you wanted to. I imagine the invite should definitely be extended. I certainly wouldn't be opposed to that. But yeah, go ahead.
No. Yeah.
Yeah. So if we backed up some, B. Riley, primarily known for being a Los Angeles-based boutique investment firm. They have a plenty amount of what's it called? Just broad financial services. So this company naturally will be harder or more difficult for those not familiar with the space and trying to, metaphorically bang rocks together and come to some sort of valuation that is somewhat fair. But like you said, the level valuation really does raise some eyebrows. Conceptually, what would you say would the difference be between level 1, 2, and 3 from a gap perspective?
So when you're looking at level 1 assets,
Yeah.
that's as simple as you can get.
Hmm.
So there's very clear lineage to what the value of that asset is. So the simplest one I can tell you is you have cash
Yeah.
in the bank account,
Yep.
stocks. So if you go to the bank and you say, I have $100,000 in stocks and I want a loan maybe on that, and you show them, yeah, I have this much cash, I have this much in stocks. The stocks they'll look at it and they'll say, okay, that's they're not going to loan 100%. We're not getting to that point, but the
Yeah.
point is that they'll take the value and they'll say, okay, that value, we can determine that value. An auditor, this is a better
Hmm.
example. I'm auditing you, and then you're telling me, or you claim I have $100,000 in stocks at the end date of this time period. Okay, well, I can go back and check all the stock prices that you had at that date, add it all up together, and I can match it. Did you have that value? Yes. Okay. And back when I was an auditor, that's exactly what we did. We would go back in time and say, okay, at the closing date of your books, what did you say your stock valuation was, or all the value of your stocks was, and what was it actually? Did it match? Yes, it did. All right, we're good to go. Very easy to do. Level 2.
Yep.
So we have there's some, it's not like a immediate market that we can really look to, but there's probably something secondary, like we could compare to a comparable product.
Yeah.
So it's not that product, like I said, this cup, or a watch.
Hmm.
You have a watch. Someone's not quoting you right now for that watch, but I can look at what other watches are quoted on the market and then determine from there that the value is more or less within the realm of reason. But there's a market that I can look to and compare to. It's not a unique product. So, let's say this watch on the wrist, it's valued at X. And then I know that on the marketplace, on the gray market, there are other watches that are, if not the same thing, and I can see what are they valued at. And then I can kind of determine whether or not, hey, that's correct or that's way out of the realm of reason. Level 3 is probably the worst one. As an auditor, it's the not the nightmare, but like the one that you can't really verify. There's a lot more trust involved. You kind of just are making sure it's not like to pardon my French, like crackhead analysis. So, but you do have unobservable inputs. So you don't know, like what I said with me and Bacon in the example. We have a business. We just guesstimate what the future cash flows are going to be, and we're telling the bank, this is the value of this business based off of this cash flows that I estimated, and the bank has no idea of where I came up with those. There's no way, it's impossible to verify that those cash flows are true because it's out into the future, and I'm using all of this measures to come to this is actually a great example. It's like you go to the bank and you tell them the future value of your stock portfolio. It's like the same thing. So it's like, this is the future value of my stock portfolio. So if you went to the bank and you didn't show them the current market price of your stocks, but you told them what your opinion of the fair value of your stocks were, right? So like to use another mutual friend of ours, Emperor Sauron, right? He has his investment in British American Tobacco. It's like he goes to the bank and he says, bank, I have this asset. I'm valuing it at $50 a share. I think that's the fair value. And then the bank's going to look at him and say, well, the market price right now is 29 something. And he's like, but my fair value estimate is based off of this. That's the crude example. Of course, we don't even do that with stocks because they're already a level 1 asset. There's already an identifiable market. So that's not even within the realm of thought. But think of the same thing with like a private asset. That would be more or less the equivalent. But you'll never see someone ever claim that with stocks because stocks is already level 1. But you'll see that with level 3, it's typically an asset that has no comparable. So like a private enterprise that me and Bacon create, and you don't have something that is the same thing as that, and you're basing it off of unobservable inputs, and that's like the keyword, unobservable. So stuff in the future is not observable.
Alrighty. Thank you, Fabio. So we got the level 3 matter, impairments of goodwill and tangible assets. If we look at the financial statements, it's somewhat on the margins, relatively speaking. But of course, good auditors saw fit to put it in here as far as the goodwill and intangible impairments on or impairments to goodwill and intangible assets on Tiger US. Relatively straightforward. But what did you think about this part? The commentary that they had on internal controls.
Well, if you already have a somewhat, I'd say indirectly, it almost goes hand in hand with having questionable valuations on your tertiary assets, level 3 assets. That goes hand in hand with like internal control complaints or concerns about potential internal control issues. Because if you're trying to run a responsible enterprise and you're trying to not be misleading whatsoever, you're going to put a lot of, let's call it, maybe operate under the law of conservatism, which is generally what accounting is based out of. So you'll hear this a lot in your accounting courses, the law of conservatism, the principle of conservatism. Always go with the more conservative approach. And internal controls are meant to rein in those spirits that might want to get a little more excited. And in the case of valuation, that's definitely the case. So there's a part, where did they say it? Company identified material weakness. But basically, you start seeing this. The company identified a separating material weakness related. So the company identified 2 separate material weaknesses. The company wasn't able to rely on a system organization controls. It's not great, Bob. Not the language we want to be if we're investors in a business that they don't have across the board different let's call it strong controls. So I think the last one, the company did not was I think it was the last one. We don't have adequate control in place to properly identify, disclose material related party transactions in accordance. Like that one.
That's also a glaring one, which you jumped me a little bit, but yeah, we'll get to that one. Like what alarms me, and I don't necessarily want to call a fraud, as I haven't done any work and I'm not even a professional, but conceptually, having tried to wrap my head around internal controls from an accounting perspective or an accounting view, one of the key things that accountants or auditors care about would be, of course, fraud. One of the ways you can help reduce fraud, the triangle of fraud being, some sort of motivating force, some sort of opportunity, and I'm drawing a blank on the other triangle. But generally speaking, though, with fraud is if you help have a segregation or separation of rules or roles, as well as custodianship, then you help reduce the chance of fraud. Now, could people be in conspiracy cahoots and work against the company? Sure, but if you have like the same people or peoples working on sales and billing, accounts receivable, accounts payable, it if they have that power, correct me if I'm wrong, but like that's a power where you could conceivably do a really good job hiding your tracks, so to speak, making it more difficult for anyone to see something's going on.
Yes.
Uh, Now, again, this is just one specific service or aspect of the company that they mentioned. Maybe it's not the entire thing, but eyebrows, I think, should rightfully be raised.
No, there's well, that's one maybe. Yes. Yep.
Okay, but yes. So, like, and to pull a rapid Dean Cayman turn on a segue, uh, the founder of the segue, yes,
I wanted to add something though. So
yeah.
generally speaking, kind of looking at this from a wholesome point of view, most people who even work at a enterprise that's found to be fraudulent, most of those people may not want to work at a company that's committing fraud. So there's having internal controls kind of allows things to be proper internal controls, also allows things to be kind of more out in the open because the separation of roles in particular. Now
Yes.
you could have, so the more separation of roles you have, the less likelihood there is for there to be just like blatant fraud, just like going about. Because if you start to open it up to more and more individuals, the less likely that you're going to have all willing participants
Hmm.
committing the same fraud. And so when you find things that are, like Bacon is saying, obscuring or maybe not telling the full story to other members of the organization that may be inputting those figures in, and they don't want to be committing fraud, but they're just working with the data that they're provided. This is oftentimes why with matters of fraud, we look to the management team who's supposed to have a bird's eye view on the matter, and often we won't go after their maybe some of their internal teams that maybe they were inputting or working with those figures, but they didn't know where the origin of those numbers came from. It's sort of like a trust internally with the business. So I just wanted to throw that out there, that's kind of why we want the separation of roles, that the more we see and for internal controls, the more we separate those roles, the less likelihood or a third party is going to be like, okay, based trust, the less likely there's going to be a fraud. Not we won't stop it, but
No, no, but
less likely, because
yes.
if I'm working with Bacon and we're working together and I'm trying to commit fraud, Bacon may not want to commit fraud. He might not want to be involved in any of that. And so let's say if I need his signature for something, or I need him to look over something, or I need him to give me a particular thing, or my role stops at a certain place and then I have to pass over my work to Bacon. He may not want to. He may not be a willing party. So
Yes. And credit to Julius Caesar, rationalizing opportunity and incentive for the fraud triangle. So yes, that component of that separation or segregation of roles,
see,
duties. Yeah.
that's what separates an accountant from a finance person. You see rationalization, opportunity, incentive. I see return on investment,
Oh.
ROI,
Yep. Yep.
return on investment.
Yeah. Fraud is good ROI until bad things happen. Okay. So yes, to Dean Kamen though, the third party or other related party transactions, what would that be, Fabio? What would that be? I wonder.
We need to
With B
find out.
Riley. Yeah. Thankfully, news for all the crap that news media should and rightfully does get. Sometimes they do a really good job, and in this case, anyone can look up B Riley's connections with Vitamin Shop owner franchise group. And what does Vitamin or franchise group's former then at the time CEO have a problem with? Well, alleged fraud. And
Mhm.
it what has happened in the past sometimes comes to light. And while I get from an investor perspective, most of the time we like to be forward looking, and that is very important. I do not want to downplay it. An eye for history probably is a useful tool to have in consideration of whatever system you're doing, because while yes, the volatility of B Riley is such where you don't need to be fundamental, you could just be pure technical and trade around, but just have an idea of what exactly you're trading around with if you only care about technicals and flows or whatever. Just being aware of these important details, and if anything happens, or if you're more of a person that cares about psychology, if that is front of mind for everybody, the a different type of punch bowl, I guess, can be pulled away from the party rather rapidly. In which case, concerns abound. Uh, did you have any opinions on this matter or topic, Fabio?
Oh, just that it's not a good look. Nothing that you already didn't cover.
Alrighty.
Not a good
Yeah.
look at all.
No.
I imagine they already distanced themselves tons and on and on and on, and they're like, we don't know anything about
Yeah.
that.
So, I wanted to ask. We could talk about it, I guess. Like, B Riley's preferred shares. This is not an endorsement of Market Watch or anything like that. They just happen to be relatively accessible for this specific preferred share. Do you care at all about not just the commons but also the price movement of, say, preferred shares in this
Yes, I
case?
mean it's the credit market still. I mean, the better is bonds, but
Hmm.
but preferred shares can tell us a little bit about the confidence about the business treading water.
Hmm.
So, I mean, there's been times where I've seen the commons kind of still be rather weak, but the preferreds do pretty good because the market itself is not stupid and it's gonna treat them more or less the same. Markets are more or less efficient. So when the preferreds are showing material weakness, let's take Brookfield's preferreds as an example.
Yeah.
If you see those, that's because that debt is tied to specific assets that might be at questionable valuations, and there might not be enough equity to cover the preferred's debt in case of something happening like a liquidation. So the at least for the case beyond what the bondholders get.
Mm.
So this is perhaps maybe an indication that the debt markets, the preferred markets, are maybe thinking B. Riley could tread water.
Mm.
I don't think the commons are perhaps showing the true reality just yet, just because there's a lot of noise in there, especially with like shorts potentially covering or being forced to cover.
Yeah.
And so I think that's a huge reason for why we saw such a violent move upward. But the preferreds market, which I think also there has been a decent amount of shorting in the preferreds market, which also, because shorting itself is a when there's too much of it, it could actually cause a lot of short-term noise that it's hard for us to determine, what or interpret what that means, because it could just be covering. So it doesn't indicate that something amazing is happening with the business. Think of GameStop. That's an extreme example. That violent move that it had to the upswing was not indicative that the company was thriving. It was just indicative that a lot of people had shorted the stock, and they had to cover their short. So over the short term, we saw a massive mispricing, and then more or less GameStop has now corrected to where more or less it should be. So the average over a period of time is where we observe efficient markets, not in the very short term.
Alrighty. So good conceptual topic on efficient markets. It's not necessarily the immediate, but over the average.
Yeah.
Alrighty, wonderful. So yes, good old B. Riley. Uh, so the auditors expressed an adverse opinion on these things. Also, it was funny because the news of them filing their fiscal year 2023 was one where they were so late. The auditors stood their ground for a while that they were delinquent with the Nasdaq where they're listed or who they're listed with. Uh, does that mean anything?
Yes. Yes, it does. If you're not capable of submitting your documentation on time, it's perhaps more indicative than not that something's aloof, something's afoot. It's not a good sign. If your investment is failing to meet the deadlines when they have a team dedicated for internal reporting and also gathering up the same documentation to submit to the auditors and work with the auditors, and the auditors are incentivized to get your stuff in on time, and they presumably have the manpower to do so. And I mean, it's more so on their hands. It's just about you submitting the documentation to them. Then you have a bit of a problem. I think you have a problem. I think you're showing that you have a problem. Now, the auditing firm that they used,
Yes,
from
Markham
what we
L.
not really known, I don't know them. And there was like at one point, I think we had a discussion about them throwing it out, but then they didn't throw them out. Which, if you fire an auditor, very big red flag. That's a red flag. But more often than not, and I'm not going to say that they're doing this, but I'm going to say in general, when you have a smaller firm, they shouldn't be doing this, but it happens. They tend to get There tends to be some sort of bullying that might occur if you're a large firm and you know that you're a very important client, you're a very big source of revenue for that partner, and you might want to push your weight around a little bit to these smaller accounting firms that might really value your business. Of course, they shouldn't care, and they should always provide. And I'm not saying that they didn't here, but yeah, it tends to be the case that there is some sort of unavoidable conflict of interest because you're the customer. That's how it works. But the guardrail in place there is that they will get in serious trouble if they, let's call it, are compromised. They'll get in serious trouble. That's supposed to be the guardrail though. But at the end of the day, if I'm getting audited by a third party auditor, I'm the customer to that auditor.
Yeah.
Not the bank or the institution that's requesting the audit. I'm the customer. So
Alrighty. I guess I got like just a few more topics. That would be when it comes to opinions, an auditor's opinion. What type of verbiage should we be looking at? Like, for example, over the internal controls, we have an adverse opinion. Uh, the heck does that mean, Fabio?
real quick on well, we get to this. I'll ask you to repeat the question, but Christopher's question on I thought
Right there.
shareholders vote. No. You vote for the board, and the
Yep.
board is your representative, and then you
Mhm.
have the audit committee who then chooses the external auditor.
Yeah.
So not
Like
management, but oftentimes boards are also management.
yeah, like anecdotally I've had companies where they will send the voting shares like, hey, we would like to keep using this auditor. But that isn't always the case, and even then, yes, it goes to a shareholders vote. But given the way how voting structures often are, like oftentimes it's very common where non-voting shares just immediately default to what the board recommends.
Yep.
So effectively, even if it's not. But um, did you have another point, or did you want me to address the next one?
Address the next one.
Alrighty, yeah. So, yes, the term adverse opinion. What does the heck does that mean? Like, qualified, unqualified opinions, adverse opinions. Fire away, Fabio. What the heck does this all mean to non-accounting people?
Yeah, so sometimes it's like the word unqualified opinion sometimes sounds bad to people. I,
But
I
that's
wish
it.
they no, but I genuinely wish they would change the language of it, because who this is meant to inform often are not accountants.
Yeah,
And so the if we wanted to set standards that allow the financial statements and therefore also the auditor's opinions to be easily legible by the general public, which is who we're trying to serve when we're doing these things, and then that's who we have in mind. I really do feel like we need to dumb down the terms and make them more so geared towards the layman as much as possible. And I actually don't like the term unqualified opinion. I don't like that. I feel like we could change it to where anyone could pick it up, read it, and go, "Oh, that's what that means," because that's who this is for. This is for, I want, if I were in charge, I had all the power, I would try to set up the language that, you're that family member that you have that has no financial background, no accounting background, could pick up these financial statements and more or less understand the language that I'm trying to express, or the message I'm trying to express in the auditor's report or the auditor's opinion.
yeah.
But yeah, so
We don't live in this
unqualified.
world.
No, we don't live in this world. So unqualified opinion is not the bad one. Adverse opinion, though, thankfully that one is pretty straightforward, because you don't. If I have an adverse opinion to Bacon, Bacon would interpret that as like, oh, there's probably a problem. Maybe we can make an argument that, hey, I would like it even simpler than saying adverse, because maybe there's people that don't know what adverse is for whatever reason, whether English may not be their first language or etc. Just simplifying the language, because who we're gearing it towards. We're not gearing it towards other accounting professionals. That's what, or just anyone. It has to be as accessible. Well, I'm gonna get off my soapbox here, but that's my opinion. My opinion. So, what did they
Nice.
receive? They received an adverse opinion, right?
Yeah, on internal controls. Yep. Yep.
Which means the auditor.
Would like to be as distant from that as possible, even though they signed off on it.
Honestly, I actually agree with Julius Caesar's comment there. Good opinion and bad opinion. Like, yeah, like good
No,
opinion
no.
and bad opinion right
Yep.
there. I honestly, like, not jokes aside, fine. Yeah, no, easy. Good opinion, bad opinion, meh.
Yeah. That would
Change the
be
word to
nice.
meh to like maybe indifferent.
Yeah. So qualified opinion would be the indifferent one,
Yes.
more or
Yes.
less. Yeah. Yeah.
Yeah.
Because adverse is not great, Bob. Not great.
Yeah, exactly. So, I mean, the adverse one is the one that I think is the most clear of
Hmm.
the three. But like qualified opinion, like what does that tell me? I'm trying to pretend I'm putting myself in the shoes of someone
Yeah.
never took accounting.
Or yeah, like even then, like a non-English speaker, like English is not their first language or their primary language, which is which is
Exactly.
which is plenty fair. Like there are plenty of smart people that not the case.
Yeah, you throw
Yeah,
me in I don't know, let's say the whole world now starts to speak German
Mhm.
for not reasons because Germany conquered the world. I know some people were going to think that. It's like,
Yeah.
no. But let's say that were to happen. I could learn it. I could be conversational, but I could never probably become fluent. And there will always be things that confuse me.
Yeah.
And then there'll be some words that I'll understand, but maybe taken literally means something different in English, but they mean something different in German under a given context. So it would make it difficult. And if I'm trying to, again, like gear towards public filings being for the public, I feel like regulators could do or standard setters could do a better job at setting the standard of how things should be said. And then internally, whatever, just talk however you want internally, accountant to accountant, use your own jargon, but hey, whatever. So let's
Yeah. All right. So we got that. I guess like the way to quote unquote defend the unqualified part would be, say someone has a sports opinion. Such and such is the greatest player of all time, or they double back and are like, oh, or like backtrack a little. Greatest player of that era at that position. Those are qualifiers. Those are modifications to that statement of greatest player of whatever sport. Instead,
correct.
it's like yeah. So if it's just like unqualified, you're talking the supremely best ever, ever. There's where there's no subjectivity or modifications that need to be made to any opinions or processes in the context of uh you know alrighty, so that all has happened. Fabio, any other closing remarks or observations on?
All this being said, I think B Riley, not Bill Riley, B Riley is a buy, and
Oh, you're no, thank you, Fabio, for gaslighting the entire
and
audience.
I think like all the stuff that we talked about is just like people stopping us from achieving riches. Um, the concerns, you can throw them out of the water,
The lies from this man.
and it's just like YOLO, like Lamau.
The lies from this man.
It's like whatever. So in all honesty, nothing from them filing their 10K that hasn't changed a lot of the concerns. And arguably, the companies like B Riley, we find that when something goes wrong, it goes wrong suddenly. And I wouldn't be surprised if I woke up one day and news came out that this company is going BK, or this company is no longer going to be with us.
Yeah,
Um,
because conceptually, like I've heard people say when it comes to Notter's opinion, quote, don't rely on it as a crutch to catch all the things, but at the same time, like they're not, they will have serious concerns if bankruptcy is involved, and they will try and give as much pushback as they can. How do you feel about those sentiments?
Yes, I mean you're supposed to learn in your audit classes that audit is not meant to catch fraud. Audit is meant to validify the credibility of the statements that they give you and the secondary opinion, exactly what it's intended for, what you just said. More often than not, what the point of the audit is to give confidence to third party, to a third party, not the third party doing the audit, but to a third party like a lender, an
Mhm.
investor. So them finding anything, again, they're not meant to catch fraud, but them finding anything, again, I'm trying to be careful with my words just in case, like, oh, then they come after me. But it could be indicative that there's something questionably bad under the hood. And there's a lot of noise. So if I was a long, I would be very scared and I'd probably sell. If I was a short, I'd hold strong. But depending on how you short it, so
Yeah.
bought it
Yes.
on the dark pool.
No. No. Oh no. uh Alrighty, sweet, wonderful. I think we even got to my just random conceptual question on auditors' opinions, and where it fits in the 10K or the person's due diligence process if they happen to care about that. Wonderful. So, yes, now that we've gotten towards the end, Fabio, feel free to promote yourself, promote your channel, your Twitter, your any upcoming releases that you have or things you have in the works.
Releases, yeah, wow. I have none because I haven't been doing videos, but um, live stream potentially today.
Ooh,
Yeah, I'll try to see if I can do it right after this one, since I'm already
hey.
sitting at the office. And then we covered. There's a lot to cover. Yeah, Capital Mindset. You can follow me on YouTube, Twitter, Twitch. If you're up for that. Fuhat's gonna be like, he's gonna flip out for that. Um, and yeah, new release will be a live stream because that's all the public content I have time for these days.
Yeah.
Especially with the project I have going on that I wasn't able to tell you guys about it
Mhm.
because before then we weren't signed, but so you guys were like, what is he doing sometimes? But yeah, what is this? Oh, and by the
Yeah.
way, for this live stream, Dan's in chat too. I will be releasing the link if any of you gentlemen would like to join. You're more than welcome. But if you all want to enjoy your Saturdays, it's also,
Yeah. Yes.
bro, you're semi-retired. You have all the time in the world. No, not yet, not yet. But
Yeah.
I thought, that it tempts me. It tempts me. But if I was retired or semi-retired, I mean, yeah, we would have so much time, videos, um, live streams, all that jazz. Yeah. But
Uh,
for now, it's just like one live stream a week plus the private content.
so, all right, Foo Hat, I that really isn't necessarily the spirit of this channel specifically. That being said, I am willing to work with you behind the scenes and look into it. Why not? Uh, that being said, ladies and gentlemen, I should have done my own promoting for this for this wonderful channel. Be sure to like, comment, and subscribe. Please do share if you thought that this was useful, value add. Appreciate you all for your time. Thank you, Fabio, for being gracious. And with that being said, yeah, let's end this puppy. You all have a good one.